Hello friends, we'll be discussing an illustration which is related to the journal entries that we just did right now. We'll solve a problem related to that. So when we have already understood the kind of journal entries that we'll be having, let's understand with the illustration how we'll be able to solve it further with some additional problems on this. So we have mentioned down the sum here. Let's understand what has been mentioned in this illustration. C is a person who sends certain goods to his customers on approval or return basis. The transaction takes place in the year 2016 and the list of the transactions along with the amount has been mentioned here. Let's understand what has been mentioned in this list. On September 15th, CE sends certain goods to his customer for an amount of rupees 1 lakh at cost plus 33.13 percentage price. On 20th of October, certain amount of goods were sent back by the customer, which is amounting to 40,000. 25th of November, he received approvals for goods worth rupees 40,000. That means 40,000 goods were approved by the customer to whom he had sent the good. December 31st, amount of rupees 20,000 goods were still lying with the customer. Now they have mentioned that C records sale or return of goods on sale as ordinary sale itself. Now we have to pass the journal entries according to that. Now the first entry that refers to is trade receivables account debit to sales account, amount is 1 lakh. That is the price that has been mentioned here. So this is the entry that will be passing. Now the second entry is the amount that were returned back. So return inwards account debit to trade receivables. Now the third entry that stated that 20,000 or rather 40,000 goods were approved, we don't have to pass any entry for this as we've already discussed about it. Let's go on to the next entry, that is closing of the year. So closing of the year will have two entries, the thing that is lying with the customer and the closing stock that we have to take into consideration. So let's pass that entry now. Now that entry has also been passed, which states that sales account debit to trade receivables 20,000 is the customer or rather the stock lying with the good. Now when we have to take the stock with us, that is the entry that we have to pass, that will be stock with the customer to trading account. Now the trick here is to understand that the stock which was sent at a price higher than the invoice price, or rather the cost price of it. So if the cost price is 100, you have sent it at 33.13% more. Hence it will be sent at 133%, 0.13. So according to that, whenever you are mentioning the stock with you have to mention it at the correct price, because if you have seen that the cost or the market value, whichever is lower, so the cost price is lower as compared to the market value which has been sent to it, so let's mention it at the lower price now. So how to get that calculation is done, that will be explaining it right now. 20,000 is the cost that is lying with the customer, but that is the market price. What is the exact cost of it is what we have to understand. When they say that 33 1/3% more, that means 33.33%, that is the base of our conversation multiplied by 100, because you have already sent it at a higher price. So to bring that at a lower price, the 100% will be on the above side, that is the numerator side, and the base will be 133.33. That will give you the exact price of that cost. So the exact price or rather the cost of that stock which is lying with the customer is ideally 15,000, but because we had sent it at a higher rate to the customer, hence it is showing at his account at 20,000. So this is what I wanted you to understand. Whenever it is about the cost price or an invoice price which is higher than the cost price, you have to mention the cost price or the market price, whichever is lower. So this is how the journal entry problem is supposed to be solved. This is just a basic problem for your understanding so that you're familiar with the kind of journal entries that we have to pass and the calculations that we have to do. So I hope this video gave you a clarity about it. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.